All right, guys, Forbes came out with an article on 8 things you need to know about buying a home about 7 years ago, and I've been sending it to clients for years, and a lot of clients have found it super helpful. Now, here we are in 2023. It's a new day, a new market, and Forbes has not updated the article. I'm gonna do an updated version of their article in this video. The original article I'm gonna link below. My name is Mike Perna. I'm a local real estate agent here in Metro Detroit. I've been helping buyers and sellers buy property and sell property for just over 20 years. Scope out our over 2,400 5-star Google reviews, and we would be honored to be considered your realtor. Click the Calendly link to set up a call to talk to us. First, and number 1 on the list, use a trusted realtor. And this next statement is not to be offensive, just to be upfront. Use a trusted realtor unless you're buying a home that I'm the listing agent on. In that case, call me direct. My job, I'm getting paid by the seller to do, is take as many dollars as possible from buyers and get the best terms for my sellers that will also cost buyers an additional couple $1,000s. And I'm very good at my job. Now, if that statement makes you irritated, then the effect I was looking for happened. You have a right to your own representation as a buyer. If you need an agent to kill it for you, call me. Also, this dovetails into the update. The average agent in 2022 sold 3.8 homes. In 2023, the number of transactions, the number of homes sold in the United States are gonna go down 20%. And look at it this way. There are 1.4 million realtors right now. That means there will be 19,000 less available commission dollars per agent available in 2023. That's a huge income shock. There's gonna be a lot of agents pushing clients into making poor decisions, but that are great decisions for them on the commission side because they're afraid to lose the deal they need, not you need. That's why I started with find a trusted realtor. Not a realtor, not somebody with a real estate license. Find a trusted realtor. My advice, call 3. Ask them this first question. How many homes did you sell in the last 12 months? If it's under 20, move on. Second, can you send me a link to your reviews? Is it under 100 reviews? Move on. Third, can I talk to 3 of your past clients? If they can't come up with that, move on. Number 2, real estate involves contracts, a literal mountain of paperwork, and the paperwork has a lot of fine print. Throughout the process, everyone on the business side of it, from the real estate agent to the lender to the title closers, all have their own set of paperwork, and these guys do this every day, so they're gonna try to move through this process as quickly as possible. I advise realtors and lenders to buy and sell a home every couple of years, if for no other reason, just to feel what you're feeling during the process and be a little more empathetic. If you're working with one of my agents, you're gonna be getting all the documentation that you will be signing, like a purchase agreement, and could be signing like a pool addendum to protect you when you're buying a home with a pool up front when you hire us. Further, we're going to take the time to go over every single clause of that purchase agreement with you well before you find the home that you want to make an offer on, so you can move confidently and knowledgeably. Ask your agent to provide you with all the docs ahead of time at the minimum so you can review them and ask all questions up front before it's crunch time and you found a home. Next up, buy for the future and not just today. Buying a home is a large financial undertaking, and so is selling one. Right now, the average American believes that they're gonna be in their home for about 5 years, but actually ends up being there 13 years. So the questions to ask yourself, are you gonna stay in your current job? If not, where could you need to be? Are you getting married? Are you planning on kids? Depending on the market and the mortgage rates, you may not actually pay down the home enough or gain enough market equity in the first 3 years to break even or even come out ahead. If it's possible that there's a life change on the next 5 to 7 year horizon, plan your wants and needs with that in mind, and don't just buy for the next life event, buy for the one after that as well. Number 4, think about commitment, and I'm not just talking about your mortgage. When you get married, the laws of your state generally determine how your assets are treated, and ultimately how they're distributed at the time of divorce or death. The same rules don't necessarily apply when you're not married. That means that you need to think long term. When you buy a home with your significant other, who is not your spouse, make sure you have an exit plan if things don't go the way that you hope. It's a good idea to have an agreement in place with respect to titling, mortgage payments, and liability, repairs, and the like, and it's best to get it in writing, and yes, I recommend getting an attorney. Further, and this dovetails straight into it, I recommend having a trust in place with a very clear will directing what happens to this so that the home doesn't get caught up in probate, costing your family that you're trying to protect tens of thousands of dollars in time and legal fees. Number 5, look beyond the pain. And it's often the case that when you're walking through your dream house, there's already one room that you're fantasizing about changing. And remember, it's fairly inexpensive to fix cosmetic issues like a bit of paint or some wallpaper, but making changes to kitchens and bathrooms can be expensive and time intensive. People tend to focus on just the cost of the cabinets and appliances and counters, but often forget about the cost of labor, which can double or even triple that cost. And that doesn't mean that you should give up on a house in need of a significant fix, but you should factor in those costs when you're making your offer. And concessions are back, and they can go a long way towards covering thousands of dollars of out-of-pocket costs at the closing and keep those dollars in your pocket so that you're able to do renovations faster. Number 6, Buy the home you know you want to afford. I didn't say could afford, I said want. Most of the time that number is different than what's on the pre-approval. And I'll use myself as the example. My first property I bought for $130,000. I spent $100,000 below my approved limit for a couple of reasons. One, I was fresh out of college. I did not know what the future was gonna hold, and I was transitioning into real estate, a new career, and I had no idea how I was gonna do in it. So instead of spending over 40% of my gross income and therefore having to eat Little Caesars $5 hot and readies and stretching those out to 2 meals every day, I bought at 20% of my income, leaving a lot of leeway if something went wrong. I was able to very quickly grow my emergency fund, and that in turn relieved a whole heck of a lot of stress. The second reason I bought in that range is because I intended to make that first home a rental property, which I did a few years later, and I actually still own it today, 23 years later, and it rents out at $1,600 a month with a $700 per month payment, which means I'm profiting pretty decently. Number 7, don't fixate on the purchase price. The price at closing is one number, but not all the numbers involved with owning a home. There are a lot of other costs to factor in. First, the closing fees, of course, but also the homeowner association dues. How much are those? They could be from 0 to 100 per year to thousands per year. Is it in a floodplain requiring flood insurance? That's a couple thousand extra per year alone. Also the taxes. I had a client looking at a home recently in the $300,000 range, and I pointed out they could buy a home one city over for $400,000, be closer to work, get a more updated home and layout for less per month than the $300,000 home, simply because one of those cities had bonkers taxes and the other one had normal taxes. And it doesn't stop there. Pools, fancy heating and cooling systems, and unique properties can cost a ton more to maintain and operate, but you don't necessarily see that until after closing. Number 8, you don't have to buy a house at all. There's no rule that says that you have to buy a house by the time you're 30 or 32 or 35 or ever. Buying a home is a big decision, and where it can be a sound financial investment for some, it's not for everyone. There's a lot to consider, including the housing market, interest rates, timing, and frankly, future plans, your future plans. You may want more flexibility or more mobility, or your career and family plans might be in flux. If you're not sure about a neighborhood, consider renting in there as a test drive, and a realtor can help with that too. Even then, you still don't need to pull the switch. There are healthy rental markets throughout the country, and in some areas, young professionals are choosing renting over home buying to preserve cash and remain mobile. And now that's finally showing up in the US Census stats. So the US Census Bureau reported that the homeownership rate is down at 64.9%. So that's 35% of adults that don't own a home, and most of those guys probably never will. For context, a 1% change in homeownership represents over 1 million homeowners. So that's over 35 million families that choose not to buy every year. If it's not the right thing for you, do not feel obligated or pressured to purchase a home at all. My name is Mike Perna. If you like this video, give it a thumbs up so more people can see it. Subscribe to the channel. We drop new videos every week. I'd be honored to get the call to interview for the job of being your real estate agent. Use the Calendly link in the description below to set up a time for us to chat. Thank you again, and see you on the next video.